I always ask portfolio publishers, especially the ones who kind of do a little bit more active, how do they manage or how do you manage your emotions? Because even after so many years of investing, I'm always, when I'm buying the dip or when I buy a beaten down stock, I always have a moment of panic and I have to be honest with myself and with all other followers. Like, what if this is the worst decision I'm making? What if this time the stock's gonna kind of crash? Or what is this reason that dipped the stock? It's much more bigger than what I'm assuming. But then, I kind of go through a logical process of like reviewing what is the growth potential and understanding the risk and kind of overcome that panic. And then I pull the trigger. So I have this like logical I talk myself logically out of panic, and then I pull the trigger and buy. What is your plan as it goes
Okay.
to either way, when you buy the dip and you're basically overcoming that fear, or when you're selling on the high and then not worrying about that, okay, maybe I'm just cutting off so fast and there must be so much more potential there. How do you manage your emotional reaction to those moments before your logic kicks in?
Okay. So when one's dipping and you're trying to dip buy, and me as a primarily a dip buying person, what I do is I start with a quarter position, right? If I feel that I'm close to support, I'll get a quarter position. If it falls more, I'll get a quarter position. If it comes to major support, I'll add 50% to make a full position at that point. That way, I'm kind of back end heavy and my average is closer to that bottom than it was from my starter. If it loses like a major support level and this looks like it can go completely turn down, I will have a stop loss in place if I feel that it's going to see significant downside. But for my long term investments on it, what I like to do, and what I brought up briefly earlier, is I like to sell covered calls. And what a covered call does is basically it hedges you for those down days. So, say for example, you buy a company for, let's use Riot for an example, because it's such a volatile stock. The more volatile the stock, the higher the implied volatility is on the stock. Okay. The higher the implied volatility, the higher the premium for the contract for options. So if you were to sell those options to people, say you own 1,000 shares, you can sell 10 contracts to people with really high implied volatility. Even if the stock just trades sideways and doesn't lose, those premiums will go down rapidly from theta and time decay. So you can essentially get $300 per 100 shares for those options times 10. Within 30 days, they expire worthless. Even if the stock drops a little bit, you gain that premium to hedge you from the downside. So it kind of hedges you when you do have some pullback, and you get to kind of, sometimes you can even make more than it dropped essentially if you do it time it correctly. And that's exactly my long-term strategy on these. So when I swing for the free shares, now I have these free shares to sell those calls forever. And the higher the stock gets, the higher the premium gets. And I got At Home Group, the one that's merging now. I bought it earlier this year for $5. It's over $35 a share, and each contract costs more than my initial 100 shares that I bought to begin with. So I can just sell them indefinitely, and each time I sell a contract is just pure profit off of it. So I really love that strategy. I think selling calls is very underrated. It's one of Warren Buffett's favorite strategies. He says you're the casino and not the gambler when you're selling the calls, because every time you buy an option, it's typically a 10 to 15% winning percentage of any call ever bought. When you sell a call, it's typically a 85 to 90% win rate for it to expire worthless for them. So that is what hedges me in regards to selling at the high. When I do believe that it's hit major resistance and I just don't think it's going to go much higher, and I've sold some that have just went parabolic without me, gone. One was Noravax. I bought it $18 a share. I ended up selling it around $60 a share, and it went to $180 a share within a couple weeks. So I'm like, oh, everyone feels like that sometimes. So what I started to do was, instead of selling all of my position, I'll hold what we call in stock lingo a runner.